The project is starting from next month, this coming Monday actually, 14th. So whatever your balances are on Friday night, those will be your starting balances for the project. So please make sure now you start trading, and then all your
Sir, I have a doubt in that. I have a question.
yeah. Sambhavna wants to rejoin. Okay. All right. Let me just see who's in the waiting room. Yeah, I guess if she's in the waiting room, it'll show. Okay. All right. So before we start, let me just, okay. So this is one of your tickers. Yes. Okay. So here's where you were. Okay. So what is Sachin's doubt? Let's,
Sir, on sir project like on 14th of September 15, you want to see our portfolio value or you want to see our share price?
no. There is no such thing as your share price. That there's going to be the any of your portfolio on of your holdings, and the NAV which comes out in the try to find my page here. Okay. All right. The NAV that you have at any point of time when you see from the account, which you can see from the account, and which you can see later on, well, I'll show you from the account statements, right? So those NAV figures, that's what I'm going to be looking at. Okay. So those are the things that I'll be looking at from from the start, which is the 14th September date, and that will be a starting NAV in the IB software. The NAV is referred to as NLB, that you will see in my notes. Okay, if you look at your calc file, I gave you an example. I referred you once to a discussion I had with Mukul where we explained what NAV is, and that the fact that NAV is referred to in the IB framework is referred to as NLV, L for London. Here they call it net liquidation value or liquidating value. And so the NAV consists of the cash, realized and unrealized P&L. So I will ask you to show me your account statements and to plot your NAV, so that you're starting NAV on the 14th of September. Okay, as I explained in the last class, in the previous class as well, that your starting NAV on the 14th of September will be whatever, that will be your starting balance, and then I'll look at the ending NAV at the end of the project. Does that clear your doubt?
Yes, sir. Yes, sir.
Right. So okay, 1 minute. Let me just. All right, so let's start with the discussion as we continued. Let's continue from the last session. This is where we were. We were discussing this. So once again, so that people are not confused, because we are going into a lot of complex topics and there's a lot of complex structure. But I just want to make sure that people are not confused, because we may need this Yahoo Finance chart. Let me just open that. And let me just show you where we are. We are discussing in this structure, as you remember, in this set of notes, which is the idealized flow of notes, which you should have studied. But we don't have the time to go through all this before, because we need to do our project. So I gave you in your session notes, you will see somewhere up in the previous sessions, you'll see there is a list of important readings from this list, a subset of this list, which you have to do for the project. That's your responsibility. You have to do those project readings so that you can understand what we are discussing. And essentially, after doing those essential readings, which are given here somewhere in this file, then we move directly to the decision problems to help you solve the decision problems in the that you're going to encounter in the course of doing this project. And these are the decision problems. That is, how do I solve the buy-sell? What should be my buy-sell bias? What should be my entry price, exit at profit, exit with loss, etc. Position size. How do I solve each of these decision problems? And that's where first we listed out the decision problem, and we're going through all of those. And then right now we're at the discussion of DP4, buy-sell bias, where we had a lot of extensive discussions. And then under that, we discussed the, you have your calc file. We had a lot of discussions about this value versus price-based paradigm. And then we are going to contrast it with the value agnostic paradigm, which is TA. And then we went into this discussion of FA versus TA. And we haven't yet discussed the arbitrage-free valuation framework that will come to later. And so this is where we were, FA versus TA. And then we were discussing, under this, we were discussing the FA versus TA framework, where you have your spreadsheet. Let me just make sure we have the spreadsheet here. I think this is the spreadsheet. Okay. So this is what we were discussing, FA versus TA. And we had gone through the first two parts of the distinction. And we had actually gone through the first one, and we were on the second one, which is the cyclical movement of market prices. On this question, the two approaches have totally different, or significantly different views. In TA, this is a very critical assumption that market prices move in these kind of cycles. Whereas in FA, there is no such explicit assumption. This is one of the other important distinctions. So when you come to the crucial question of how do I decide whether I do FA or TA, we'll have a section on that, but we have been discussing that question from time to time. The main idea is that you will ask yourself, you will look at the assumptions of each of the approaches, and then you'll ask yourself, which of the assumptions do I agree with? And if you agree with the assumptions of TA, then you'll go for TA, otherwise you'll go for FA, if you agree with their assumptions. So that's why we're studying these things, trying to understand four critical differences. Now, this is a very important topic by itself. So, and this actually leads us to, because the whole objective here is to give you some kind of, that's why in some senses you might feel that our, what we are studying is a little bit haphazard. But part of the reason for that is that we need to quickly give you a framework to be able to solve all these decision problems, which you are going to encounter in the course of your project, so that you have some kind of structure to do your project. Okay? Because you're kind of like just being thrown like a baby into the water without being taught how to swim. So now we are trying to just give you some basic knowledge. So that's why what we are going to do is, even though we are in the larger discussion of this FA versus TA, we can't go through ideally in this sequence. We are going to make sure that we take this point and we use it to develop a very basic kind of technical trading system, which will help you to operate, which will give you some kind of structure with which you can operate in the course of your project. So that's where we were. We were trying to understand this topic in detail. And as you know, there is a separate note for this, which launches from your DP4. There is a separate note for your DP4 solutions. And so what I've done is the discussion I had the other day on how to choose between FA and TA, where I gave you my own story of how I decided to become more of a TA person. That I have put into a separate note, so that again, not to clutter this up, there's a hyperlink to that note. And then we will add some other points also to that. So on this point, now we are now in this note. Okay, so we go back to this note. Right, so now I've made this, this is a very cool feature where you can have these hyperlinks to the chapter headings. You can just click here and go to the chapter heading. So we were actually here. Okay, we were in this smaller cycles constrained by larger cycles. I've explained it, but I'm just going to explain it one more time so that we understand. So again, this is all very kind of abstract if you read it. but since I'm writing it, I have to write it in a very technical manner. But basically, the idea here is very simple, which we have already explained. That if you look at what did we look at? We looked at FCX in the last. Remember this. Notice this. Whenever you're pulling up Yahoo Finance charts, look out for this on the bottom right. This means that the last point in the data set is not the current price or the most recent price. So click on it. And now you don't see it anymore. That means this is the most recent price at the end. So we looked at this point where we are now trying to explain this point here, which is that smaller cycles are constrained by larger cycles. Okay, this is basically, this is your, under properties of cycles. This is your third point actually. The numbering here is not called property. So this is the third point. The first two we had already discussed, and this is the third point we are discussing. We already discussed it, but I'll just quickly go through it once again in case anybody has any problems. All we are trying to say that smaller cycles are constrained by the larger cycle. So the larger cycle here is this low to this low, right? About 8 years. This is the low to low. Remember, cycles are always discussed either low to low or high to high. So here we would say, now look, there is an 8-year cycle low to low in FCX. Okay, not very off the mark, as you can see 2008. So here 2000 to 2008, and then the next one should be 2016, and it actually comes in 2016. Okay, that's quite interesting that you have this level of regularity where there are two major lows happening 8 years apart, and then 8 years here again. So remember this, I did not create, this happened in the real world. So that's where you see some of the regularity that you see in the price patterns. So anyway, so look at the first cycle, 8-year cycle low to low. Two parts, uptrend and downtrend. Or what we mean by smaller cycles constrained by larger cycles is that when you look inside, if you zoom into the uptrend, you can see smaller cycles also. Cycles in the sense, not in the sense of a neat sine curve, which is perfectly symmetrical, but the point about moving up and moving down, moving up, moving down, moving up, moving down. So what do we mean by constrained by larger cycles? Well, the reason it can't, when it goes up, then it comes down. It can't, in this case, we are looking at it within inside an uptrend, okay, inside a larger uptrend of the larger cycle here. The reason it can't come down fully is that because it's part of an uptrend, okay, it's actually inside an uptrend, it has to maintain a net upward movement, okay? So it can't come down like a neat sine curve and come fully down, so then there's not going to be any net upward movement. So this is actually inside a net upward movement. So therefore it has to go, when it goes up and it comes down, the next low is higher than the previous low. Similarly, all the lows are higher than the previous low. That's why you have a net, and the reason it has to do that is because it has to maintain net upward movement, because it is constrained by the uptrend segment. It is constrained by the fact that these smaller cycles actually are constrained by the fact that they are part of a uptrend segment of a larger cycle. Okay, so these are smaller cycle, as you can see, low to low, smaller cycle, low to low, smaller cycle, smaller than this one, which is 8 years. So these smaller cycles, they can't form fully as neat symmetrical cycles because they have to be, the net result of these smaller cycles has to be an uptrend because it is part of an uptrend segment of a larger cycle. That's all that we need. Okay, and then from there we went on to take us to a very important definition of cycles, okay, this is where we went to, right? Uptrend and downtrends can be specifically defined. So again, as I said, you have to read all these parts. If you don't understand anything, if you think something is not written clearly, you have to inform me, okay? And then I will clarify, I will improve the writing. All right, again, this is all very technical, but it's very simple because it is being written here. So I have to write it in a very specific way. So uptrends, LT plus 1 greater than LT and HT plus 1 greater than HT. HT means, HT plus 1 means next high. Okay, so this, if this is HT, then this is HT plus 1. If this is LT, this is LT plus 1. And every time you look at two lows, then the previous one is the T and the next one is the T plus 1. So all that this is saying is, it is in a very mathematical kind of way of writing it, but all that it means is you have higher in an uptrend, you have higher highs. All the highs are higher. The subsequent highs are all the subsequent highs are all higher, and the subsequent lows are also higher. That's how you get an uptrend, and that's the definition of an uptrend. So what we're doing is, here we are specifically defining uptrends and downtrends. Okay, very simple. And as I said, always never try to memorize this. Always draw the picture and then say the words in English. Don't try to memorize the English, because then you'll get confused. Okay, as you saw in the previous class, I also was getting confused. Higher and lower, high, low. It's very confusing. You have to draw it first and then describe it in English. Then you won't make a mistake. Okay, so when we have this definition, and then it takes us to our next point. That so far, any questions, guys? Anybody? Any questions on what we are doing, where we are? Okay, so let's go to the next point, because from here we will try to develop a simple system which you can use for your project. And so minimum conditions for starting and maintaining uptrends and downtrends. Okay, let's look at this. Starting, maintaining. So if you see here, right? So you have to first, and for every time you're looking at trends, you have to be very careful. At a point of time, you must always lock into a particular zoom level. Like if I'm looking at the very biggest cycles in this chart, I have to lock into this zoom level where all I'm seeing is, this is looking like a straight line to me. I don't see all the smaller ones. At the high level zoom, I see this low, this high, then another low. And this is also a pretty long-term low. So you can say 16. As you can see, very interesting, because you see, again, you see half of that. See, this is 2000 to 2008, 2008 to 2016. And then half of 8 is 4. And then you see another major low. This is actually higher than this low. Okay. But it is a major low that is happening in about 4 years from the previous major low. So that's about half the cycle. So it's some interesting patterns here, but essentially these are the only points I would look at. If I were looking at a very high level zoom, one low, second low, third low, and fourth low. It's actually a little half cycle of this level of zoom. And then one high and two high, and that's it. I won't see, and this high also, okay, smaller high. And I won't see any of these, okay? So at any point of time, you have to be very clear about which level of zoom that you're using, okay? Which level of zoom are you using? Because otherwise you can get a little bit confused. So you lock in once, and what we are saying is, so the analyst has to designate the first two highs and the first two lows of any trend, okay? And this basically locks in the degree of magnification of the trend. This is basically these are the important points here, because otherwise you get confused and you start moving around between degrees of magnification. Degree of magnification means this. This is a very low level of magnification, very high zoom out level. And then as I start magnifying, I zoom inside this, I start magnifying, it becomes higher levels of magnification. So what we do is, basically what do we have for minimum condition for starting an uptrend? Two highs, two lows. Second high is higher than the first, second low is higher than the first. Because remember, what did we say? If you have an uptrend consists of, if you go back to the previous section before this, you see that we said an uptrend is higher highs and higher lows, okay? T plus 1 is higher than T for both highs and lows, okay? So if you remember, when we were doing this course in we were doing this case in legal aspects of business. We did this case called Harvey versus Facey, and there was a telegram where they said indicate lowest price for bumper haul pen. And so then we had this discussion while looking at this case. We had the discussion about the use of the words lower, low, lower, lowest. Okay, so or high, higher, highest. So therefore, and then we asked this question, like, if I use a term like lowest, what is the minimum number of prices I'm thinking about? And the answer was 3. So because, high, higher, highest, low, lower, lowest, there has to be at least a contemplation of 3 prices. So now here, when we say higher highs, the minimum number of prices we are considering is 2, okay? Because we have a high price and then we have a higher price. That's what we are talking about. So what we are saying here is just that in order to have an uptrend, all we need is higher highs and higher lows. So all we need is 2 lows, where the next second low is higher than the first low, and 2 highs, where the second high is higher than the previous high. Okay, that's all we are saying. So this is where we are talking about minimum conditions for starting uptrends. Okay, so minimum condition for starting an uptrend. This labeling, minimum condition for maintaining, yeah, so this is fine. Starting uptrends and downtrends, and this is for maintaining. So let me just put this in bold. This will make it easier to understand. This is for starting and this is for maintaining. We'll come to the maintaining later. Let's first understand starting. This is very important to understand. Make sure everybody understands this. If you have any kind of doubt, you must clarify at this point. Okay, which is.
Sir, excuse me.
Yes.
Sir, I think Janvi Umat is in waiting room maybe.
Yeah, I just admitted her. Okay, sir. So, okay. So, so now what we do is we are talking about minimum condition of starting uptrend. So it's very important to understand this. The base, this will give us the logic for a lot of things. And so all we need is 2 highs. What does it say here? 2 highs, 2 lows. Second high is higher, second low is higher. Okay, so here, if we start looking at the FCX chart from here, we see that we have 1 low, we have 1 high, then we have another low which is higher than the previous low. So we have a second low which is higher than the previous low. So now all we are missing at this point, all we are missing is a second high which is higher than the previous high. So the important thing to understand is that the moment that the price starts to move up and the moment that the price goes higher than the previous high, as soon as it goes higher than the previous high, you have established an uptrend according to our definition, because you already had the low condition satisfied. You had 2 lows and the second one was higher than the previous low. Now all you're doing is you're waiting to see if an uptrend develops. Let's say you're at this point and you see the price climbing up. As soon as the price climbs to a new high above the previous high, immediately you have this condition satisfied, right? Minimum condition for starting an uptrend has been satisfied. Okay, is everyone clear about this? What I just said? In the case of an uptrend, as soon as you have the second high, the first high being exceeded by a new high, okay, and before that we have that has been preceded by 2 lows, where the second one is higher than the previous low. As soon as you have this, you have a new uptrend. Okay, so a new uptrend has started. So this is very important to understand that this is this is the earliest point where you have the indication of the start of an uptrend. Okay, this is important because when you start an uptrend, especially when you put this into a momentum philosophy, you will see that we have this, let's say when we talk about, we can mention a little bit of it here also. Momentum traders. So make sure, as you guys are noticing, we are using many of these concepts. Now these notes have been provided to you, momentum versus mean reversion. So I will now keep on referring to momentum versus mean reversion. So you have to be able to follow that. And that's why you need to do those readings in your spare time and make sure you understand. And if you don't, then you have to ask me questions so that we'll keep on referring to it and you have to be able to follow. So a momentum trader, okay, so when there is an uptrend, okay, maybe I'll just write it with capitals, it's easier for me to see. Wants to be, okay. So here now, what is the answer here? Does the momentum trader want to be, when there is an uptrend, and if you are a momentum trader and you see there is an uptrend, okay, implications, let's look at implications for the buy-sell bias decision. Okay, let's call it BP. Okay, so we are just thinking about what is the implication for what is the implication of these minimum conditions for the buy-sell bias decision problem, which is our DP4. Okay, so let's take the example of the momentum trader. So based on what you have understood about momentum, when there is an uptrend, the momentum trader wants to be long or short?
Sir, long?
Yes? Yes, what is your answer?
Sir, long?
Wants to be long. Okay, you're not sure, you're asking or you're telling? You're asking.
Sir, telling. He wants to be long.
Okay, good. So the momentum trader wants to be long. Okay, make sure you understand the logic for it. Everything has to be logically understood. There's nothing to memorize here. The reason the momentum trader wants to be long, the reason the momentum trader wants to be long is because remember that a momentum trader's philosophy is that he wants to be, he believes that the trend, whatever the current trend is, that will continue in the same direction, okay, for an indefinite period of time, and we'll give you another principle later, that it will continue in the same direction, okay. So, so Utsav, if you can give us a further logic, can you give us the logic for your answer?
Sir, I also had the same logic that since he's seeing an uptrend and he will continue, but he will think that this trend will continue for a time period, longer time period. That is why he will most probably buy the shares at that time and keep them because he is expecting an increase in the value of the shares in the long term.
Okay, yeah. So that's correct, but you have to make it even more, computer-like kind of answer. Okay, because it says wants to be long because momentum trader believes the trend will continue higher. I'm just going to write it here later on. I may organize. Believes that current trend will continue. Okay, so this may mess up these notes a little bit. I may try to clean it up later on. But momentum trader believes that the current trend will continue actually until it reverses. And I'll explain this. Okay. So uptrend implies further gains. Now, I'm sure everybody has understood by now what Utsav is saying. But I'm just now here, the reason I'm writing it like this is that I'm trying to teach you to answer questions like as if you were talking to a computer, so that you understand all the logical steps involved, including what we in logic are referred to as suppressed premises, okay? certain things which we human beings kind of automatically assume, but a computer doesn't know anything. So if you train yourself to talk as if you're talking to a computer, it will, make your, it will improve your logical reasoning. Okay. So a lot of people are coming in quite late. So what I'm doing is actually now, because of technical reasons, I don't want to mark people absent, but I'm deducting now. Priya has just come in. So
No sir, I'm not late sir. मैंने actually laptop से पहले ही join किया हुआ है. In fact मैंने 15 minutes पहले ही join कर लिया था. तो actually laptop में कुछ charging की problem आ रही है, इसलिए मैंने phone से दोबारा से on a safer side के लिए join कर लिया था.
you guys have to make sure you speak in English in the class. Okay.
Okay sir.
Because we
Okay
are
sir.
everybody, because it's for your Hindi doesn't require any improvement. So
Yeah, sure sir.
yeah, okay. So okay, all right. Okay, so uptrend. So we're trying to teach you to talk as if you're talking to a computer. Okay. All right. All right. So in the case of an uptrend, we expect further gains, because if we are a momentum trader, we see an uptrend, we expect further gains. Okay. And so all traders want to make a profit. This is the assumption of rationality, not market rationality, but trader rationality. So what everybody wants to make a profit. Okay. So this is kind of very, it seems almost very obvious. Why am I writing such simple things? Let me get all the gaps so we can see. Okay, so if prices are going to rise, only long positions will make money. Okay, so this is basically, this is something that we would call a suppressed premise, in the sense that we understand that this is an assumption that there is a desire to make a profit. Okay, but when you're talking to a computer, even you have to make even these obvious statements clear to the computer, because the computers don't understand all this. They don't know that everybody wants to make a profit. You have to tell them that you have to assume that all traders want to make a profit. So all traders want to make a profit. If prices are going to rise, only long positions will make money or make a profit. Okay. So only long positions will make a profit, and short positions will actually lose money. All right. So that's why, hence, position is long. Okay, or desired position. Hence, desired position is long. Okay, so it's a long answer, but it's important to understand how to give your answer in a completely logical manner, and how to think in this completely logical manner. Okay, so that's what we are talking about here. So what is the implication? We were talking about the minimum condition for starting uptrends and downtrends, and from there we are just talking about an uptrend. And if you're talking about what is the meaning of this for the buy-sell decision problem, that if you're a momentum trader, the moment you see an uptrend, you want to go long. Okay, saying I want to go long or go short. Okay, so we want to go long, and what is the logic for that? This is the logic for that. Okay, so the point here to understand is that later on we will see when we look at the decision, when we come back at some point pretty soon, we'll come back to this decision problem, the entry price, PP5 solutions, and then we will talk about the three different order types. Okay, when we talk about maybe we have it somewhere else. I haven't opened it yet, but when we talk about the three different order types, you will see one of the order types is the stop order, and then you'll understand how these why the stop orders are used to enter positions, and from here you will understand this logic will come into play. So the point to understand here is that if you're a momentum trader, you're waiting and watching. If you're at this point of time, you're waiting and watching, if you're a momentum trader, the moment this previous high is exceeded, as soon as you get a price above this previous high, you can immediately go long as a momentum trader, because at this point, as soon as the previous high is exceeded, you already have the establishment of an uptrend. And remember, if you're a momentum trader and you see an uptrend, your desired position is long, which means immediately you go in and buy. Okay, so therefore you would actually enter, and this actually would be done through a stop order. We'll explain that later when we come in. But the point to understand here is that as soon as it makes a new second high, you want to be long, you get a buy signal. It's like you get a buy signal at this point of time. This is important to understand. Okay, that the uptrend has started, and as a momentum player in an uptrend, you want to be long. So you essentially have a buy signal as soon as the establishment of the uptrend is seen. Okay. So if we go back now and look at also the same thing for the italics. Yeah. All right. So the same thing for a downtrend. Okay. We're talking about starting a downtrend. 2 highs and 2 lows. Second high. This is wrong actually, because I copied it and I did not change it. So what should be the answer here? Answer here it should be second high should be, we're talking about a downtrend. Okay. So remember, so that's why never memorize it. So if you're talking about a downtrend, you focus on this downtrend. 2 highs, second high is lower than the first high. Second 2 lows, second low is lower than the first low. Or you can even take a high level look, take this low and this low, this high and this high. So you have a second high lower than the first high, first low, and the second low lower than the first low. Okay. So minimum condition of starting a downtrend, 2 highs and 2 lows, where the second high, this should be lower. Okay. So lower than the first, and the same thing should apply here, is lower than the first, and second low is also lower than the first. Okay, so I just copied the sentence structure from the previous part, and then I forgot to change this. So right, so ideally what should have happened is some student should have read this, noticed it, and pointed out to me that there is a typo here. Okay, so starting a downtrend, again, when you read the English here, it looks very confusing and it kind of looks kind of abstract. It will not make sense until you look at the chart. Okay, you look at the chart and then it makes sense. If you want to look at Uber, although nobody is traveling much these days, but if you want to look at Uber, you see high, second high, low, second low. So this is a downtrend. All right. So the point here again to understand, starting a downtrend, what happens is when you're starting a downtrend, you have one high, you have a low. So first high, first low. You have a second high, which is lower than the first high. And when is this downtrend established? The downtrend from here on this level of zoom, on these high level zoom, on these high level waves. The downtrend is established when you have high one, first high, second high, first low. As soon as the market goes below this previous low, okay? So you can see this gapping action here. You see this gap here is just around the time that this low is broken, okay? Exactly there, okay? You can see that this is called a gap. In not the clothing store gap, but this is a gap between, as in, mind the gap when you get off the Delhi metro trains, the gap between the platform and the train. So this kind of gap. So this is called a price gap. Okay. So you can see exactly as soon as the previous low is broken to the downside, you have the establishment of a downtrend. Okay, so once again, based on the logic that Utsav provided, as soon as it goes into a downtrend, if you're a momentum player, okay, you will immediately want to go short. So therefore, what will happen is a lot of people would have, will come to the order types later on, but essentially here, when you are at least at this point, when you have not yet broken this, but in case it breaks, you would actually be, you would have a sell stop order. You would have a stop order to sell, and that's how you would enter your position. And at this point, so we'll explain that. You'll have a stop order to sell, and that will enter you into the position at a price less favorable than the current market. So if the current market is here, and you would, and you see that this is the previous low, you have two lower highs, and you can see that if the market falls below this, there will be a downtrend. So when you're sitting here, you don't know all this. When you're sitting here, you would have a stop order to sell. So the market is here. A stop order to sell is actually, obviously selling at 32.90 is better than selling at 25, right? So you would have a stop order to sell, which will be at 25 when the market is at 32.90. So that's why you would enter. This is where we talk about the third scenario in DP5, where you're entering at a price worse than the current market. Okay, so the stop order in this sense, the opposite of a limit order. Similarly, when you go back to FCX, when you see this low and this low, you've seen this high, and you're somewhere here. You haven't yet crossed this high. You're somewhere here. You put in a stop order to buy as soon as the market crosses this level. Okay, and so that price is higher than the current market price. So you're actually buying at a less. You're buying at a price higher through the stop order. You're planning to buy at a price higher than the current market, which is less favorable, because when you're buying, you want to buy lower. Okay, so that's basically what it is. So what you have to understand here mainly is, we'll come to the order types later. I'm just giving you a preview of that. But basically what you have to understand is the minimum conditions for starting an uptrend and downtrend. When you combine it with the momentum trading philosophy, you can understand how the buy and sell signals appear. As soon as a new high is made for a momentum trader, you have a buy signal. As soon as an uptrend is established, as soon as a downtrend is established, here you have a sell signal for a momentum trader. Okay, so this is something important to understand from our definition of uptrends and downtrends, the starting of uptrends and downtrends. Okay. So in fact, this, although we are discussing the buy-sell bias decision, at this point we are discussing this point, DP4, and that's when we got into FA versus TA, and that's when we got into cyclicality. Okay, and that's how we are discussing the properties of cycles. So we are discussing still the buy-sell bias, because when you get a buy signal, you get a buy signal, or you get a sell signal, as in Uber. Okay, you get a sell signal. So we are discussing the buy-sell bias, but then we are also talking about the. We had a brief discussion about the DP5, the entry price, whether to enter at market or worse than market. We had a preview of that. And then we are also going to start talking now about the 6.2, which is exit with loss. So let's go on to this second topic, the next topic. Any questions at this stage? Everybody has understood what we have said? Okay, let's look at the next topic. Maintaining. We talked about starting, now maintaining. Maintaining uptrend. Look at the mathematical notation. These are the conditions for maintaining, which means if you want to keep the uptrend or downtrend intact, you have to satisfy these conditions. If you want to, this is for uptrends, and for downtrends, you have to satisfy this condition. notice that when we're talking about maintaining the uptrend, for maintaining uptrends and downtrends, for uptrends we are only focusing on the lows, and for downtrends we are only focusing on the highs. Okay, so let's see how this works. Go back to FCX. We focus on this trend. For now, here you have first low, second low, first high, second high. Immediately, as soon as this high is exceeded, you have the beginning of an uptrend. Starting of an uptrend has been demonstrated here. Okay, has been seen here. Now, as long as for maintaining the uptrend, we need that LT plus 1 must be greater than LT for all T. Okay, and here. So this low is also higher than this low actually. It's not so clearly visible, but it is. Okay. So low, higher low, higher low, higher low, higher low. Okay. As long as, so now here you see a small violation, but this is a matter of degree of zoom. You have one higher low. You have one higher low, and this higher low was broken here. Okay, there was a small move down. We will talk about what this means. But if you ignore this low and you stick to this low, and then you can still say that this low, I mean, the next low is higher, and then the next low, instead of taking this, if you take this, it's still higher than the previous low. Okay. So this, of course, is a little bit convenient. It looks like we are brushing. We are sort of glossing over things that are not fitting the narrative. But as we'll come to this problem later, what it means. Okay, this actually is already explained in this section which we are discussing. Okay, I'll come to this. But low, higher 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 low. Now we have a problem. All these lows are higher. Now as it goes up to the highest high, then comes down, and then it breaks down below this low. Now there is a problem. Now this entire uptrend has been neutralized. Okay, so that's what we mean. So as long as we were maintaining this pattern, this entire uptrend was maintained. Okay, as you can see, the entire uptrend was maintained, and okay, so the entire uptrend was maintained here, and the first time we have a violation is when we go and break below this. Okay, so at least the maintaining part you can see clearly. As long as all the subsequent lows are higher, the uptrend is being maintained. Right. Similarly, on the downtrend side, here you can read the conditions on the file. You can read the conditions in the file. Same thing. Downtrend is high. All highs must be lower. Okay, for all T, the highs must be lower. So if you look at the same chart and you look at this downtrend, you see high, lower high, lower high, lower high, lower high, lower, lower, lower. Now, here's the first problem. This high is lower. This high is lower than this high, and I think this high is also lower than this high. But at this point, you have a problem because this high has clearly been broken. So at this point, you would say that at the very least, the downtrend from here is now no longer being maintained because this high is broken above this high. Okay? So this condition of HT plus 1 is less than HT has been violated, at least at this point. Not at this point, I think it's slightly lower, I think, than this one. At this point, it's clearly violated as soon as it goes above. So this is what we have to focus on. So as you look at charts, since we are teaching you all this, as you look at charts, now you should see all this. You should start to see all this. So you will be looking at charts with fresh eyes. Okay. So you have understood this, what is meant by, so for starting uptrends and downtrends, and maintaining uptrends and downtrends. Okay. And So as long as the uptrend is maintained, we say it is intact, okay, or we say it's continuing. Okay. Now, if the conditions of minimum conditions for maintaining are violated, we say the uptrend has been neutralized. Okay, neutralized, or you can say it is no longer in progress, or it is not continuing anymore. You can say all kinds of things, but we have just chosen one word, neutralization. Okay, that the uptrend has been neutralized or downtrend has been neutralized. Now, this is the statement that I was referring to. This part. Look at this last statement, that if you neutralize an uptrend of any given degree on any given degree of magnification, okay, any given degree of trend, and magnification is just the zoom level. Okay. Now, it does not necessarily mean that the uptrend or downtrend of the next higher degree will also be neutralized. What does that mean? This is what we are talking about here. Okay. This part. So if you see here, FCX, there are actually, at this point, you can talk about 2 degrees of trend. One is the degree of trend, which is here, low, 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 low here, low here, low here. Okay. Now there's also, so this is 1 degree of trend. There's also a 1 degree lower level of trend that is further zooming in, which is a trend like where you see low and low, high, high. So zooming into each of these components, okay? Then you have low, high, low, high. So this is a slightly smaller degree of trend because it is zooming into each of the components of the larger trend, which is up, down, up, down, up, down here. So this is the 2 degrees of trend. So when this low is broken, comes down here, when this low is broken, the trend that is neutralized is the lower degree of trend, which is basically zooming into this segment. So the low, high, low, high. This smaller degree of trend is neutralized because you have low, you have a higher low, you have a high, you have a higher high. Smaller degree of trend is started within the larger uptrend, and this is neutralized. But this low does not go below this low. So the higher degree trend where we see up, down, 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 up. This higher degree of trend is not neutralized, although the lower degree of trend inside this has been neutralized. Okay. So this you will see very often in the markets. Okay. So when you have, when you're following a particular degree of trend, so this is all that we mean here. Okay. This is important to understand that at all times you have to be looking at multiple degrees of trend, okay? And this statement is going to be true, that if you neutralize the trend on any 1 degree, it does not necessarily mean that just because this smaller degree of trend is neutralized, doesn't necessarily mean that the next higher degree of trend will also be neutralized. It might further fall and neutralize the bigger trend also, but it might not. I mean, you can't be sure about it either way. So that's why we say that it does not necessarily mean that the next one will also be neutralized. Now here you can see it's a very big drop. So it would have neutralized, if you look at a smaller trend here, low, high, low, higher low, high, higher high. So first it breaks the smaller degree of trend inside this segment, and then it makes the larger trend also. Okay, because the decline is very big. So you never know, as this one is breaking, you never know whether the bigger trend will also break. But you can't conclude necessarily just because this breaks that this will also break. That's all we are saying over here. You have to be mindful of that. Okay. So yeah, so that's why we have, when we have any kind of a trading system, okay, it is always specific to a particular degree of zoom, okay, a particular degree of magnification. Any trading system is specific to a particular degree of magnification. So it trades on a particular degree of magnification, okay, and therefore all the decisions will be related to, all the conclusions and the inferences will be related to that level of magnification only and not necessarily higher levels. So now we have clarified all these things. Okay, so now let's understand something. So now exiting positions, okay, let's look at the meaning of maintaining. Now one of the things you notice is that when we talked about starting uptrends and downtrends, okay, we talked about starting uptrends and downtrends, we were able to combine the starting conditions, okay. When the starting conditions are satisfied, we were able to combine it with the momentum philosophy, and we were able to then use these starting conditions to come up with buy and sell signals, which means we were basically solving this problem. Okay, we were using the basic trend, the trend definition, okay, higher highs, higher lows, and combining with the momentum philosophy to quickly solve this DP4. Okay, because we came up with buy signals and sell signals. Okay. Now, what we can do now also is, having looked at maintaining uptrends and the signals for conditions for maintaining uptrends and downtrends, we can now actually combine this. We can take this and take us to a solution for 6.2. Okay, and let's see how that happens. Okay, so let's take this conditions for maintaining uptrends. Maybe we can write this up. So before we come to this simple trading system, we can see quickly. Yeah, we'll copy the implications from here. Which we are calling, just put the link here, and we'll put this. They should be posting to the hyperlink. Yeah. Okay, so we come to this now. This maintaining maintenance conditions. Okay, how can we connect maintenance conditions to the exit price with loss DP, the solution to this? Okay, so now these are all technical discussions. So obviously you have to understand, when we go back to our TA, we are actually inside this discussion. Okay, and as we said, cyclicality is a very important assumption of TA, and it's not really an explicit assumption in FA. So under this discussion, then we moved in, we sort of zoomed into this topic because it is so important a part of technical analysis, and we're going to use this entire discussion to derive a technical trading system. So towards that end, we are actually discussing this topic in detail. All right. So these decisions that we are talking about things like this. How can we use this to solve this DP and that DP? Now these are all from a TA perspective that you have to be clear about. because we are discussing, we said that cyclicality is important in TA, and we are using the properties of cycles to come up with this problem. So these are DP solutions based on TA, not on FA. Okay, we want to be clear about that now. See, maintenance conditions and how can we connect it? Let's think about it. Okay, so here now let's say I went long at this point in FCX because I'm a momentum trader and I'm looking at this level of magnification. Okay, so I don't see this. I just see this as one straight line. So 1, 2, 3, 4, so on and so forth. I went long and I kept getting higher lows, higher highs. So I went long here. As soon as a new high was made, I stayed long, and we are assuming here that we don't do any pyramiding. So I went long and I stayed long. That is for the sake of simplicity. Okay. Then at this point, finally, okay, what happens? So all the while the lows are higher, so the uptrend starts and the uptrend is being maintained. However, when this low here, when this low is being broken at this point, okay, at this point when the market is falling through this, below this low, at this point, I can no longer say that the uptrend is being maintained. Okay, the uptrend at this point, as soon as this is broken down, according to our definitions, the uptrend from here, we say that the uptrend from here has been neutralized. Okay, on this degree of magnification. On this degree of magnification that we are talking about, up, down, up, down, up, down, up, down, up, down, up, down, up. Okay. At this level of magnification, notice that I did not count up, down here. Okay. So this is a further zoom in that I did not do. So at this level of magnification, this uptrend is now neutralized. Okay. So now go back to the logic. What is the meaning of trend neutralization? Okay. So if you see earlier, okay, earlier what we did was right. So when let's reword this a little bit. Okay. So let's write it as she, because she includes he. So we can, when we say she, we can include he inside she. Okay. So okay. So as soon as an uptrend is established, she wants to go long. Okay. Momentum trader. Now we know the logic for this. So Utsav gave us the logic for this earlier. We know the momentum trader wants to go long because an uptrend has been established. Further price rises are expected. I want to make a profit, and if prices are going to rise, only a long position will make a profit. So I go long. Now, if when the uptrend is neutralized, okay, I'm not writing perfect English here. I should write the uptrend. When uptrend is neutralized, okay, what happened? Can we expect further price rises? Okay, what is the answer to this, Akshita? When the uptrend is neutralized, we started with an uptrend. Okay, now we saw this uptrend. Now, the moment the uptrend is neutralized, can we remain as bullish as we were in these phases? Yes, Akshita, are you with us? or are you sleeping? Okay, so here we find out who are sleeping, who are the people who are sleeping. Okay, let's ask Shrishti.
Sir, uh, we are not sure because as we are seeing we have the chart in front of us, we can see a complete downtrend. But as we invested, keeping that momentum in our mind, so we can expect an uptrend.
No, but here there's something important that has happened, right? And now, can we say the uptrend is still in place? Because now
No, sir, it has been neutralized.
it has been neutralized, right? So
Yes,
the
sir.
point that is basically this, that the point is that
So,
the answer here is no, basically. Can we expect further price rises? The answer is no, okay? Because the further price rises are only expected when an uptrend is being maintained, okay? When the uptrend is continuing, we can expect further price rises as a momentum trader, because that is the meaning of momentum, that when the uptrend is there, until it is neutralized, it will keep going higher. That's what we expect, okay? So you can think of a rewording of the momentum philosophy is that the current trend, okay, is, we can rewrite this, okay, just to be clear. Yeah.
Sir, Ketan is waiting in the waiting room.
So momentum philosophy, we will just rewrite it. It's there in your notes, but means that up down trends will continue. It is almost a tautological statement in the current direction. Okay, continue to extend. Okay, extend means keep on moving forward, keep on becoming longer and longer. Continue to extend in the current direction. Okay, until they are neutralized. Okay. Okay.
sir,
This is,
excuse me.
yeah.
Sir, Akshita this side.
Yeah.
No, sir, I was just saying at that time when you were calling my name, so I was facing some problem, I guess, in the network.
Okay. 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 No problem. Okay. So now we're talking about the momentum philosophy. Just to be clear, that why did I make this statement? When the uptrend is neutralized, can we expect further price rise? The answer is no. Why did I say that? Because the momentum philosophy essentially is that up-down trends will continue to extend in the current direction until they're neutralized, obviously. Yeah, so the point is here that we have defined an uptrend as higher highs and higher lows. Low, higher, low, higher, low, higher, low, higher, low, so on and so forth. But when this last low from which the new high is made, this last low is broken. Now, see, we can't say that at this point of when we are now at this point in the market, okay, we can no longer say that there is an uptrend from this point on this degree of magnification, because the condition of higher lows and higher highs, or the maintenance condition, which is higher lows, the maintenance condition has been violated. So this uptrend is no longer being maintained. Okay, this is clear. So make sure you understand the logical steps. So when the maintenance conditions are being violated, okay, so when the maybe we should put this whole thing under a, right? When the maintenance conditions are being violated, when the maintenance condition is violated, okay, that is the uptrend is neutralized. When the maintenance condition is violated, we say that the uptrend is neutralized. Okay, so when the maintenance condition is violated, we can no longer say that there is an uptrend. Okay, because the uptrend conditions maintenance conditions have been violated. So we can say the uptrend has been neutralized. We can't say there is still an uptrend. Okay? So the point is that there is no more, we no longer have an uptrend. Okay? So therefore, according to the momentum philosophy, okay, the up-down trends will according to the momentum philosophy, the uptrend, downtrend will continue to extend in the same direction until they are neutralized. Okay, or let's put it this way: unless and until. Okay, to make it a little bit more. Okay, unless and until they are neutralized. Okay. So now, obviously, when something has been neutralized, then you can't say that as a momentum trader, you can no longer expect the trend to continue in the same direction because they have been neutralized. The trend has been neutralized. Okay, so essentially, you can no longer. The meaning of this is that now this may sound a little abstract, but try to understand the basic implication here. That once this uptrend, higher low, higher low, higher low, once the maintenance condition is broken, the uptrend is no longer no longer continuing. Okay, so therefore. Okay, the uptrend is no longer continuing. So the point is that at this point, the uptrend has been neutralized. So since there is no longer an uptrend, as a momentum trader, I can, Yashorya needs to mute himself. Okay, so as a momentum trader, I can no longer expect, I no longer see, I see that the uptrend is no longer in place, okay, no longer continuing. So I no longer expect further gains in price. Okay, so this is the part. Is everybody clear about this up to this point? That once the maintenance condition is violated, the trend is neutralized. So the uptrend is no longer continuing. And as a momentum philosophy, since the momentum philosophy believes that up-down trends will continue until they are neutralized. So once they are neutralized, you no longer believe that it will continue. Okay, so I hope everybody is clear up to this point. Okay, so now what does that mean? So when you went long, okay, so let's say when she went long, okay, if you went long earlier, okay, the assumption was that because she was a momentum trader, okay, the assumption was that in this case we are discussing an uptrend, so we will leave out the downtrend part. The assumption was, so when we're going back, when she went long earlier, the assumption was that the uptrend would continue, okay? Would continue to extend in the current direction, okay? Right? Now, okay. Now that assumption is no longer valid. Does everybody follow my logic up to here? Make sure you understand everything logically. All the decision problem solutions that we give you are all logical. There's nothing to memorize. Once you understand the logic, you'll be able to figure everything out. Okay? So at this point, I hope you understand. You go long. Why do you go long? Because you see the beginning of an uptrend. You are a momentum trader. You believe that when there is an uptrend, when an uptrend is established, it will continue to go higher until it will continue to move higher in the same, it will continue to move in the same direction until and unless it is neutralized. Okay, so you follow it. You are very careful. You are very watchful, making sure that as soon as it is neutralized, you are made aware of it. So you follow the lows and highs, and in particular, you follow the lows, and you see they are all higher, and they are not being neutralized. So the assumption remains in place. You expect the trend to continue. That's the point of a momentum trade. But So the assumption here that you're making all the time, which is being validated at all these points, the assumption is that the trend will continue higher. Okay, but once the neutralization of the trend happens, okay, when the uptrend is neutralized, the assumption that the uptrend would continue to extend in the same direction, that assumption is no longer valid. Okay, so now the point I'm trying to make is that if you do something, obviously it's a common sense thing. If I do something based on a certain assumption, okay, then as if I get information that that assumption now is no longer true, then should I continue to do what I did? Doesn't make any sense, right? Because I did something based on a certain assumption, but now I have information that the assumption is no longer true. So then I should no longer do what I was doing, or if I can reverse that action, I should do it. I should reverse that action, right? Do you understand? Everybody agrees with this logic, right? That I do something.
Yes, sir.
Yes? Everyone agrees? Okay. So the point here is this, that this is pretty common sense. Okay, that if I do something based on a certain assumption, and then now I find that the assumption is no longer true, then I should try to reverse it. Okay, if it's possible, I should try to reverse my earlier action. So all we are saying is that just as I went long here, because I'm a momentum trader and I believe that once a trend is in place, it will keep on moving in the same direction unless and until it is neutralized. So as soon as I get the signal that the uptrend has been established, I have to go long. In the same way, as soon as I get the signal that that uptrend has been neutralized, that assumption based on which I went long, that an uptrend has been established. Okay. Established means it is also being maintained. That assumption is no longer true. So by the same logic that I used to go long here, at this point, when this low is broken, when the market falls below this low at this point, okay, at this point, I no longer have a justification. Now, all this while I'm maintaining my long position, no pyramiding assumed, okay. And at this point, as soon as this low is broken, I no longer have a justification for maintaining my long position. Is everyone clear about this? Very important to understand, and you'll understand how DP 6.2 is being solved. I hope everybody's clear. Okay, let's ask Harsh. Harsh, are you clear about this?
Yes, sir. Yes, sir. I'm clear.
Understood? Okay, good.
Yes, sir.
So now that's why what we do is, when you have, if you see now earlier, if you remember, I had given you some instructions. We had discussed G, although G is not a part of your, let's look at FCX, which is part of your list of tickers. Okay. Now, if you go long on FCX, okay, let's assume you're looking at this degree of zoom where you are looking at all these. So let's look at it a little bit more. Let's zoom into this part in greater detail. Okay, let's make it a 30-minute chart. So the rally from 4 will become clearly evident. Okay. Now, if I'm looking at FCX and I'm, let's say, a momentum trader and I want to go long, and my longer term filter also, the 1 month filter is also, the 1 year filter is also satisfied. If we take 240, we see the filters I gave you 2 filters. So 1 year, if we look at 1 year means August of 2019. If we look at August of 2019, yeah, somewhere here, this is our starting point, somewhere here, and today. So if you clearly see the 1 year trend is up, okay, the 1 year trend is up because the low is higher than, the low is made earlier than the high of this particular entire part to the right of where I put my cursor. Okay, so approximately August of 2019 to this year is 1 year, and if you look at 3 months, that is June, July, August. So if you start from 1st of June, okay, from June, July, August also, if you look, the high is made later than the low. So the 3-month trend is also up. So both the filters are, in the same, both the time frames are in the same direction, both the screens or zoom levels. And so you're now in a position to trade. And let's assume that, now we go back to, so we want to zoom into this part. Okay? Want to zoom in and see greater detail. Because at this point, if you see at this level of zoom, actually what you can see easily is only one low, second low, one low, first high, first low, first high, second low, and then after this second high, but we don't know where exactly the second high has been confirmed, but it's gone higher than the first high. But we want to look at a little bit inside this rally. And we see here, okay? So inside this, now we are looking at a slightly more zoomed in view. Okay, so it's a different trading system. Every level of zoom is a different trading system. Okay? You have to think of it like that. We'll explain later what a trading system is, but every level of zoom is a different trading system. Okay, so now we're looking at slightly more. We can see slightly more detail instead of seeing low, high, low, new high. Not sure where it has ended. We are now seeing some greater detail inside. Okay, so we start. Let's say we are looking at this level of zoom: low, high, 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 low, and high. Okay, this is the level of zoom we are applying. And now if we go long as a momentum trader, we can see there's an uptrend. Okay, we see clearly an uptrend, higher highs, see, higher highs, all higher, all lows are higher. Clearly we have an uptrend. And do we see any violation of the uptrend? Let's ask double A. At this level where we are, is there any violation of the uptrend?
Yes, sir.
Is there any violation of the uptrend so far?
Sir, I'm not able to see the arrow. Yes, sir. Now I'm able to see.
Are you not able to see the FCX chart?
I am able to see the chart, but I was not able to the point where you were pointing.
No, I'm not pointing anything. I'm asking you directly. At this point, based on what you see, do you see a violation of the uptrend which we identified? Do you see a neutralization? Instead of violation, let me say neutralization.
Yes, it can be seen in March to April, between March to April when there is a low and it goes high and then it comes back a little
So
low.
I'm sorry, let me be very clear. I'm talking about 18th March onwards. I'm talking about the rally that is happening from 18th March to the right.
Yes, sir.
That uptrend hasn't been neutralized?
Sir, in between, if we zoom in this, we can see that it is neutralized.
No, actually, if you look at the level of lows and highs we zoomed into, it's not been neutralized because the lows we identified was low, low here, low, these are the lows. And all the lows are higher. See that?
Yes, sir.
Okay, so at this point, what we would say, this on this based on the zoom that I identified for you by pointing out the highs and lows, I locked into a level of zoom. Okay, a zoom level, which is this is the low, this is the low. Okay, then this is the next low, this is the next low, and so if you see here, there is no neutralization at this point. Okay, it is progress. Now, if Sachin is going long at this point, okay, let's assume that entry price is assumed to be market price. Now, if Sachin goes long at this point, and now if the price falls below this level, after Sachin goes long, if the price falls below this level, whatever, let's say 1410, okay, let's say it's 1410. We don't know what the exact level is. We're not going to waste time. Now, if it after Sachin goes long and then the price falls below this level, let's say the price falls to say 13. Okay. Now, would we say that the uptrend is neutralized? Yes, Sachin?
Yes, sir, neutralize, sir, neutralize.
It's neutralized, right?
Clearly visible, sir. Neutralize.
I'll just finish this point. I'll just finish this point. I'll just take 2 minutes extra. It is neutralized because
Yes, sir.
this uptrend is declined. This critical low has been violated. So the condition of maintaining an uptrend, all lows must be high. All subsequent lows, LT plus 1 must be higher than LT. Okay, that condition is violated. So the uptrend is neutralized. So when Sachin went long at this point, I'll just quickly finish this point. When Sachin went long at this point, he was a momentum trader. Why did he go long? Because he saw that the uptrend is in progress. As a momentum trader, he believes that as long as an uptrend is in progress, it is expected to continue in the same direction until and unless it is neutralized. He did not see any sign of neutralization, so he assumes that default assumption it will continue. So therefore, he goes long according to the logic given by Utsav earlier. But now, where is this solution? Exit price with loss. At what point should he exit by taking a loss if necessary? At what point should he exit? That answer is here because once it goes below this, the assumption based on which he went long, which is that there is an uptrend. Okay, he went long based on the assumption that there is an uptrend. So this is the point. If the market goes below this point, the condition for maintaining the uptrend is violated. The uptrend is neutralized. So therefore, this is the point where he must put his stop to exit his position. So once the market falls below this, he must exit his position because the assumption based on which he entered his position is now no longer valid. So you do something based on a certain assumption. If that assumption is violated, you should try to reverse that action if it is possible. In this case, it is possible. He can reverse his buy decision. He can sell his entire position, square out his position as soon as the market drops below this. Okay. So now you guys have understood how this 6.2 is solved. Okay, in a technical sense. Okay. I just hope we can discuss this further again next class. But I think initially you have understood what is the logic for putting this as your stop. Okay, for a momentum trading philosophy. We will continue in the next class. I've taken 2.5 minutes extra. So now class is dismissed. Anybody has a question, they can stay back. The rest of you can go.
Sir, I have a doubt.
Yeah, tell me.
Sir, as per my understanding, neutralize the situation wherein we should just sell off the stocks is when the stock price is around 12 in the month of August. Because
okay, you're saying
yes, sir.
You're saying that instead of the stop being over here, yours
Yes, sir.
be over here.
Yes, sir.
Okay. So yeah, you're not wrong. Okay, you're not wrong. But the reason I mentioned this is, remember I locked you guys in. You have to always be clear about the zoom level. Okay, you have to always be clear about the zoom level. So that's why I locked you guys into this particular zoom level. Notice that this zoom level is one level more zoomed in than if I use a 240 4-hour chart. This is a half-hour chart, 30 minutes. Okay, this is 30 minutes. Now you see, I locked you into this particular zoom level. That's why it's very important to be clear about what zoom level are you using. Okay, so I locked you into the zoom level. How did I do that? I mentioned to you that the relevant highs and lows are low, low. Notice I didn't mention this low. It's a smaller level zoom. I mentioned this low, low, this low, this low, this low. Then next is this low. Then next is this low as a high part of the higher level also, but here also is relevant. Then this low, and this low. This is the zoom level I was talking about. Okay. Now, if you go back, your statement is correct. So because I mentioned this zoom level, so on this level, when you look at the condition for maintaining the uptrend, condition gets violated as soon as this low is broken over here. As soon as this low is broken, on this zoom level, the condition is violated as soon as this is broken. But your point is not wrong. Why? Because if you notice, you're talking about 4th of August approximately, okay? You're talking about approximately 4th of August, okay? Now let's see why your point is also correct. It just, your point relates to a different zoom level, that's all. Let's go to 4-hour charts. Okay, now you see 4-hour chart. Let's zoom out, let's zoom in a little bit here. Okay, but if we zoom in too much, then we start to see the lower level charts, it becomes confusing. Okay, now you see why your statement is not incorrect. It just relates to a different zoom level. See, when we are using this zoom level, okay, 4-hour charts, pretty much all we can see, I mean, you can see the smaller ones, but if you want to just see easily what is easily visible, all you see from this point onwards, you see one low, you see a high, you see another low, and then you see another high here, which has not yet really ended. Okay, you don't know where exactly this high has been formed. So, but it's higher than this high. So if you see this low, this is basically what you're saying. You see here, now we zoom in to see what is this 4th August. You see what I'm saying? So your statement is not correct. If the zoom level you're using is the zoom level of the 4-hour chart, then all you can see on this trend segment is you can see the low, you can see the high, and you can see another higher low, and you can see another high. So if you don't zoom in further than this, okay, if this is the maximum zoom in that you do, then you can't see all these little squiggly things inside, right? You can only see this. So therefore your statement is correct on this zoom level. If that's the zoom level that you're using, then you would definitely put the stop over here. That means only when the market drops below this 4th August low, okay, whatever that is. Okay, as it happens, if we zoom in further, we can see that 4th August low, I think, is somewhere near. It says, you see the low 1245. Okay, it's actually 12.45 is the low, but the exact low is not important. You just see what is, you know which one to focus in on, and then you read it from the chart. Okay, so is this clear now, Srishti? You understood what I'm saying?
Yeah, sir, I understood. But sir, how will I be able to, sir, you took some interval, like I can zoom it to some other level. So what will be the optimum level of zoom so that we can take a wise decision?
No, that is there. I don't want to see. I have given you guys one set of parameters. I have given you guys like 1 year and 3 months. Okay, that is just to help those people who are not clear on their own. Now, let's say AA decides on his own that this 1 year, 3 months, I don't like this system. I would want to use 3 months and 15 days. Okay. As long as you are using 2 time frames, you're fine. You can select whatever you are comfortable with. Okay. And then you can also select the zoom level that you're comfortable with. Even with 3 months and 15 days, there is also the matter of selecting the zoom level. Now, that zoom level is based on this chart granularity. You have to do the readings. See here, there is a very important reading towards the end, unfortunately. But it is because we are working so much with charts. If you look at your readings, right at the end, tracking markets using charts. Now you'll notice that in your session notes, okay, when I highlighted the important chapters for the project, these are included. So you need to do these readings or watch the videos, okay, to understand what is meant by granularity and all that. So this is also your decision. So answer to your question, Srishti, is you can make up your mind. The only thing I would say is that once you make up your mind, then don't keep moving around. So once, say, AA decides that he wants to do 3 months, instead of using my 1 year and 3 months, he wants to use 3 months and 15 days. Fine. But then he should lock into that. Now he should not keep changing from those 2 time frames. And then he should also decide what is the maximum zoom level he will use. Here, this is 4 hours. Okay. Now, if you want to stop at 4 hours, you can also do that. There's no right answer here. The only thing I would say is Once you decide, okay, then don't keep changing it. If you decide that, in this case, for instance, if Srishti decides that she will not go further, she will not zoom in further, okay, then she will not zoom in further, then in that case, she will, so that's the, basically you should, then you can look at this as your stop, but you should continue to maintain this consistently. Then you should not keep changing. Then now you're using 4 hours, then later on you go in and use 5 minutes, because then you will get totally confused, because you will see different lows and different highs. If you use 15 minutes, you will see different highs and different lows, okay? So therefore, now all this in your 4-hour Zoom, you could not see these lows, okay? You could only see this one, okay? You could see that high and this low, and then the previous low of early March. And you could not see in the 4-hour Zoom, you can't see these highs and lows. And then you'll get totally confused. So once you log into a Zoom, so the answer to your question is, your 2 time frames, I've given you 1 year and 3 months. If you want, you can change it to any other 2 time frames you want, okay? And you should also decide what is the maximum Zoom level you want to use. You want to use 15-minute charge, 5 minutes, 4 hours, what do you want to use? Decide anything. But once you decide, don't keep moving. Then you stick to it. If you keep moving around, you will get confused. This is clear, Srishti?
Yes, sir. It is clear now.
So you figure out for yourself what is comfortable for you. Okay. And if you are not clear, then you use my in this case, 1 year and 3 months. So actually you will be trading, the 1 year is only a high level filter. Actually, you are going to be trading in the smaller system, which is the 3 months. Okay. If you are not clear,
Yes, sir.
then you are using 3 months. And in 3 months in FTX, you can see the Zoom level is automatically decided for you here in this chart. So then this would be the stop, because obviously the lows are here, high is here, low is here, high is here, high is here, low is here, low is here. So if you go along, the stop is going to be here. Is this clear?
Yes, sir.
Okay. Anything else? Any other question?
Yes, sir. Yes, sir. Sir, one thing I have noticed is that like going on and on with the zooming thing just creates confusion only. It would be better if we stick to 4-hour or 8 hours chart, I guess. I mean, it would.
That, you know what, no, I'm doing all this zooming in, zooming out constantly because I'm trying to show you the different levels of magnification and what you can see on the different levels, what you cannot see on a high level, etc. I'm showing you different things, so I'm zooming around. But you're absolutely right. That's why I said, once you decide, then you don't go further than, then you don't go, further than, you don't zoom in further than that. Once you decide a zoom level, which is the maximum zoom in that you are going to use. Okay. So as I said, so suppose you decide that the maximum zoom is 4 hours for you. Okay. If that's what you decide, that's fine. You stick to it. Then you don't go, you don't zoom in further than 4 hours. Is this clear?
Yes, sir. Yes, so that's what I'm saying, that I should stick to one time frame, and I should, like, I will not obviously move around, zooming in, zoom out, zooming in and zoom out, zooming out again and again. It would just like
Yeah.
the more I'll zoom in, the more I'll be confused. So I should just stick to one and see it from that end only.
Yeah. In fact, for this entire project, you can easily do the 1 year, if you want to use 1 year and 3 months as the data sets, okay? And you want to use 1 year and 3 months as the data sets, and you want to zoom. So there are 2 decisions to be made. One is the data range. When I gave you the guidance, so you have to read the notes on charting, okay? The data range is 1 year and 3 months. This is, I gave you, this is the high level filter, and this is the trading time frame. I gave you this as a guidance. If you want to use something else, you can use 3 months and 15 days, whatever you want to use. But you also have to decide on granularity. Maximum granularity, that is maximum zoom in. Let's say in this case, Srishti wants to use maximum zoom in of 4 hours, nothing shorter than 4 hours. So now you can actually just operate like this. You can take any ticker. If you have to do, let's say Uber, then you will put in Uber here. Uber is one of your tickers. Okay. So by doing Uber is very new because the IPO is quite recent. Okay. So you can see just by doing, you will not even have full 1 year of data, but the full data that you have, you can see that, and then you can figure out for yourself what is 3 months also. You just zoom out, scrolling up, you will get a zoom out effect, and then you can see for yourself. 3 months will be June, July, August at this point. So you can see here. What is the trend for 3 months? That is also down. Okay, you can see it from here, but at no point are you going below 4 hours. You are sticking to 4 hours. So is this clear? Make sure you understand the difference between data range and granularity. Granularity is here, 4 hours. If Srishti says my maximum granularity is 4 hours, that means she will never go into 3 hours, 2 hours, 1 hour, 45, 50 hours. She will never get into all this. Her maximum granularity is 4 hours. Okay.
Yes, sir.
Okay. Now, data range is different. This is granularity. Data range is talking about the total time between the starting point of the data set and the ending point. Ending point is always the current date. And so this is the data range. So when I'm telling you 1 year and 3 months, that means in this chart view, you only see 1 year of data. And if you go to 3 months, you only see 3 months of data. But for any given data range, you can use multiple granularities. Data range can remain the same. You can ask the
Yes, sir.
show me 1 year of data using 1 minute charts. If the system is capable of doing it, theoretically, there's no reason why it can't do it. Okay, it may
Yes, sir.
be a constraint in the actual software that you're using. They may not allow it, but this is what it is. Is this clear?
Yes, sir.
So yeah, you're right. Absolutely, that once you decide your maximum zoom level, you should lock into it and not change it.
Yes, sir.
Okay, is this clear? Yes, Khushbu,
Yes, sir.
questions? Khushbu is attending classes for a long time now. Any questions?
No, sir.
Okay. All right. Okay. All right. Okay. So we are done then. Anything else? Srishti, any other question?
No, sir.
Okay. All right. Okay. So I'll see you guys in the next class. So I hope
Okay, thank you, sir.
about where I'm uploading the videos. It's in the lecture vids.
Yes, sir.
So once
I
this,
had checked it.
yeah, I'll upload this to this one also. Okay. All right. Take care. Bye.
Okay. Thank you, sir.